we detected an unusual trade worth $22 million on Robinhood Market stock, ticker symbol HOOD. And so, in this video, we'll break down this unusual options activity to figure out whether this wealthy investor is bullish and buying, expecting the stock to move higher, or bearish and selling, expecting the stock to move lower. Because, as we all know, the rich have more access to exclusive research and information, sometimes even leaked insider information, giving them an edge to make better, smarter financial decisions. This is how smart money always stays one step ahead, well before the rest of the market catches on. No wonder the rich get richer. And so, to level the playing field, let's dive into our analysis to gain insights from the rich so that our subscribers and members can profit from this deep knowledge too. As we can see here on the options time and sales tape, the most unusual trade happened on August 6th at 12:47 p.m. at the 29th second mark for these August 15th options and these October 17th options. And based on our deep research across multiple variables and data sets, this wealthy investor was closing out these August 15th options and rolled into new trades with a later expiration date and a higher strike price. This means that these October 17th options at the 105 strike calls are the new open trades. And we can see here that there were two more transactions for the same options that were traded at around the same time. So we have 4 large transactions that were made for these October 17th options at the 105 strike calls at roughly the same price. And so we can calculate the total cost this wealthy investor spent by multiplying the price per contract by the total number of contracts traded. Since these trades were for the same options, we can add up the quantities: 12,580 plus 6,700 plus 1,000 plus 1,000, which equals 21,280 contracts in total. Next, we multiply the total contract by the price per contract, 10.74. Keep in mind that options prices are shown here, and each options contract controls 100 shares of stock. So to get the dollar value, we multiply by 100, or simply move the decimal 2 places to the right. That means an options price of 10.74 equals $1,074 per contract. And so, after doing the math, this equals a total trade size of approximately $22 million for this unusual option activity. But keep in mind, just because a trade is large does not necessarily mean it has a high probability of success. In fact, this one carries more risk than the smaller, more selective trades we share on our website. And so, if you want to get access to the lower risk trades with a higher probability of profit, then go to our website. We'll put a link up here. Keep in mind that our members also get earlier access to trades like this before anyone else, even before we share it with the public. So if you're tired of being late and want more time to act on these opportunities, just head over to our website, where you can see in real time when and which stocks wealthy investors are trading on Wall Street, so that you can have the same opportunities as the rich. Because if the rich get richer, why shouldn't you? With that said, even though this trade carries higher risk, we still took it, but we used position sizing to manage our risk. As you can see here, on the option chain for the October 17th options, we also bought these 105 strike call options and got into the same position here, marked as POS, which stands for our position, and the green color indicates a buy position. Now, how did we know these were new opening trades? Well, notice how the volume of contracts spiked up, reaching 22,473 contracts. That's significantly higher than the existing open interest of just 1,844 open contracts, which tells us these were new contracts being opened, not existing ones being closed, because it would not be possible to close out 22,000 contracts if only 1,000 contracts were opened previously. This data is very important to confirm because if a wealthy investor is closing out contracts or trades, it could be a sign they're losing confidence in the stock. And in that case, it might not be the right time for us to jump in. On the flip side, if a wealthy investor is opening contracts, like in this case, it could signal an opportunity for us to start a new trade. We always take this extra step to verify the data at a deeper level because many other websites and scanners don't. They report all high volume unusual trades without filtering out closing trades, which leads to wrong results and losses for those following unusual option activity. And that is why we have more winning trades than other websites. And in this case, our deeper analysis confirmed it. This was a new trade opened by this wealthy investor, not a closing trade. So now, with that confirmation, we also bought these 105 strike calls for $1,074 each, the same price as we calculated and saw earlier on the options time and sales tape. And so, when we analyze this trade, you can see here on the risk profile graph where the profit or loss shows up here, and the x-axis represents the share price of the stock, which is currently trading over here, and the y-axis represents the amount of profit or loss. Note the zero break-even line here. And so when the purple line, which represents the current date, and the blue line, which represents the option's expiration date, are trading below this zero break-even line, as the share price goes down, this trade becomes more negative, more loss. And as the share price goes up, this trade becomes more positive, more profitable, because it's going long bullish on Robinhood stock. We can also confirm that by checking the options Greeks. This trade has a positive delta, which means it's positioned long and bullish. If it was a short bearish trade, we would see a negative delta instead. But keep in mind the risk with this trade. It has a negative theta, which means it loses value over time due to time decay. And that is why you can see here the purple line drops down lower to the blue line as we approach the option's expiration date. Since these options lose value through time, the break even on this trade moves higher as time goes on. And so you can see here, even though the call options we bought have a strike price of $105, the stock needs to trade above $115 per share for this trade to be profitable at expiration. Because of this added risk, along with other factors, we only took a small position in this trade. We don't invest a lot of capital into these higher risk trades. Instead, we focus most of our capital on lower risk, higher probability of profit trades, the kind of trades we share on our website. We'll put a link to our website here, where you can also learn more strategies to boost your profits. Let us know in the comments. Do you think Robinhood stock will move higher or drop lower? As always, please like, subscribe, and until next time, let's keep tracking the trades of the rich so everyday investors can profit too. Take care and have a wonderful day.